Most people who buy cryptocurrency think about the price. Few think about what happens at tax time, and even fewer truly understand what they owe, why they owe it, or how the rules that govern it were written. Matt Shallcrass is a chartered accountant with over 2 decades of experience and one of New Zealand's leading voices on cryptocurrency taxation. As a director of Optima Chartered Accountants, he sits at an intersection of traditional tax law and an industry that is rewriting the rules faster than the regulations can follow. I'm your host, Nicholas Turnbull, and this is NZ On Chain. There's a reputation that cryptocurrency is used in organised crime. Would you say it's more or less compared to traditional currencies?
I would argue that a lot more crime is committed every day with just ordinary dollars and cents.
Because you see the stuff in America and obviously Hollywood, they play it up, and it's like, oh, they use the strip clubs and the coin laundering machines and everything like that. You're like, oh, well, does that actually happen here?
Yeah.
It's like,
and I have heard sort of anecdotal evidence of, sort of rumours of that sort of stuff. But I think Hollywood does do quite a good job of hamming up what that sort of looks like. My understanding with sort of financial crime and things, it's generally done within sort of a criminal sort of network that operates outside of the mainstream, because obviously we've got requirements as a anti-money laundering reporting entity that if we see anything suspicious, we're to report it. So I think the criminals are quite good at knowing how to sort of operate below
like
the radar.
Who to pick and who not to pick.
Soft targets. Yep. There's certainly been a few high-profile instances of accountants who haven't, complied with their requirements.
What does actually tax evasion look like from your point of view?
Yeah. And so I guess if we look at tax conceptually, in order to live in a society where we have healthcare and roads and things, it all comes at a cost. So we need to pay our taxes to fund these things. So tax evasion is when people, choose not to pay their fair share. And generally it comes in the form of under-reporting income, and that is generally in, through cash transactions that haven't gone through the books.
So it is like the strip clubs then.
Yeah, there's certainly an element of truth to those things.
Yeah. And have you had any experience dealing with those kind of companies before?
Yeah, I think where it comes to light is generally when a business is looking to sell. So you'll come across an instance where their turnover for the last, 10 years might have been 100,000, and then all of a sudden they're about to get it ready for sale and the turnover's sort of mysteriously sort of increased. So one of the things that, you sort of wonder, well, does that come from, organic growth, or are they being a little bit more disciplined with what they're putting through the books? And, from our perspective, we're always encouraging our clients to do the right thing, but we can only, we're limited to the information that's presented to us. And, it's a tricky one as to how deep do you dig into a client's situation. And then, so, I think there probably is we probably are a little bit naive on some of those things, I guess, because, the reality is an accounting job is only worth a certain amount in the market. And, is there really truly enough time to consider every aspect out there?
So you would say that's that's the main reason how would people actually get caught? Would it be that, like you said, you inflate costs when you're trying to sell it? That'd be like a prime reason.
Yeah, I think big data has certainly helped. Like IRD's put a lot of resource into their technology over the last few years, and we're starting to see some of the return on investment from that. So what they'll do is, and I don't know how they do it, but they'll, they've got access to banking information. So they'll compare what was declared in your tax return and then have a look at what's gone, through the bank accounts and go, well, there's a mismatch here. Can you please explain?
Because they've obviously got back-end access to all
They've just got everything.
Yeah, exactly.
You can just assume that they know everything.
Do you think that's where crypto, I guess some of other people, like you didn't say that earlier, but it's like some people may think, well, crypto's riskier and you can hide more and
Yes.
stuff like that. Maybe people think, well, is that the reason why it's like more fraud and stuff goes on, or like?
Yeah, I think from that perspective, there's certainly, and it's interesting because to some extent, crypto is the most transparent money we
Yeah,
have. Like it's all on chain.
yeah,
You can, I can't see in real time what's going through someone's bank accounts, but I can see on Ledger what they've been up to. I
yeah,
guess the tricky thing is you've got to know the identity of the person whose that address belongs to. And I
exactly.
guess that's where sort of governments and tax authorities can see a risk as to what the purpose of those transactions may be for.
And that's where like that CARF stuff came out, like was it last month, something
Yeah.
like that. So it's interesting, like they're definitely changing the rules on how things work, and it's pretty interesting.
Mm.
But like zooming out from that, let's start like how you actually got into accounting, because I know we've had conversations about how you started with the pizza boy and stuff like that. Maybe you want to touch on that.
Yeah, so, I've only had 2 jobs,
Yeah,
delivering pizzas and accounting,
yeah.
and I took a pay cut to get into accounting.
How does that work?
Well, I was working at Pizza Haven, if people remember
No, I
that
don't.
from back in the day. But I think it was 0800
Yeah,
83, even know the number. But I sort of start out, first job from high school was delivering pizzas, and I must have done an okay job because I sort of, I was making the princely sum of $11 an hour
yeah.
in 2000 and 2003.
hmm
And then I had through school, I got the opportunity to do some work experience in an accounting firm. And so I'd work in there in the school holidays, and then at the end of the holidays they're like, oh, we would like to offer you a job. And so I started on the minimum wage at the time, which was $8.50 an hour.
Holy.
And then
Yeah.
over the years I've sort of progressed
Yeah.
from there. But I was fortunate that the firm that I worked with was a very traditional firm, and so I had a very solid foundational knowledge of those key accounting concepts,
hmm
and something that the next generation of accountants coming through, they sort of have missed out on to a degree, because I think,
What do you mean by that?
well, I guess you have like it, and it maybe the firm was a bit antiquated, but we had one computer between 4 people, whereas now
Jeez.
everyone's got a
Yeah.
computer. It's all multiple screens,
hmm
and almost to some extent, it's so automated that you don't actually understand the process.
hmm
And so I'd sort of go right from analyzing the transaction to putting the financial statements together, so you can see right through the whole process. And I guess that gives you a bit of an advantage and an edge and a knack, I guess, for identifying where things aren't right,
Mm.
and some of those practical skills to basically make something quite complex simple.
Yeah.
And making complex problems simple, I guess, has probably been a real sort of strong point and advantage I've had
Mm.
in my career.
The picture that I have right now is a previous job that I worked at. Essentially, I remember my old boss, he had this big book,
Mm-hmm.
and literally he would just write everything down, and then someone came
Yep.
to him and was like, you need to use Zero.
Mm-hmm.
And I even said to him, like, yeah, I've used it before. I think it's pretty good.
Yeah.
And he's like, nah, the book's good.
Yeah.
It works. And then he finally made that switch. You could tell his life just became a lot easier.
Yeah, I certainly agree. And there was a simplicity to the book with all its columns, and
Yeah.
you could just sort of focus on that one thing for a whole day. But it's certainly, technology like Xero certainly made a lot of that more efficient and freed up that
How so?
time for other things. Well, it's really gone from a processing piece, like literally writing, looking at the bank statements and going, well, there's $10.59 needs to go in this column.
hmm
You go through the bank statements and then get the adding machine and add them all up, and then put that into your trial balance, and then
hmm
prepare your financial statements. Whereas Xero, you just code it,
hmm
reconciles it, and then you've got more time with the theory anyway
Yeah.
that you can analyze and interpret what that information
Do you
means.
think with AI coming up, do you think there'll be more alternatives to Xero and
Yeah.
like people doing their own stuff? And
Yeah, I'm probably I'm probably a little bit concerned about Xero, to be honest.
Yeah.
And just off the back of major sort of performance issues that they've had over the last couple of weeks.
I did see that. They emailed me and I'm just like,
Yeah.
oh, did it affect me?
Yeah, don't worry, we claim the compensation.
What happened?
Well, it's just technology just couldn't, they just couldn't maintain that uptime, and the communication from the organisation, I think, as it often is, wasn't the best, and they didn't really give any reason as to why it went down. They're like, oh, it was issues with, I think they said a third party provider, and that's part of the issue with the cloud is everything's sort of third party. And it's all
AWS, whatever it
concentrated
is.
in either Google or
Yeah,
AWS, and that
yeah.
goes down, and everything else goes down. So we've got, this piece of software that so many people rely on, and then all of a sudden it doesn't work. And even, quite regularly, it has issues. It's sort of plagued with issues constantly. It's just that was one of the more sort of notable ones. So we've sort of got all of this stuff that we rely on, but there's really no accountability if it doesn't work.
So you said compensation, they actually like paid you because
They
or something.
refunded all affected subscribers 1 week of their
I see.
subscription.
Damn, maybe I got
I don't know,
probably
well,
not.
if you don't, well, you got to, and then it's even interesting. But I'm going on a rant now.
No, you're all good.
But with the compensation, they made that hard. It's like, well, you've got to raise a support case.
Yeah.
So I've already been inconvenienced, and now I've got to be even more inconvenienced to get this compensation, which I don't know how much it is, and like what 1 week worth of a Xero subscription. Like it's it's always nice, but it's like
$40.
like $10.
Yeah,
So it's like, well, if I knew it was a week, maybe I wouldn't get too worried about it.
Yeah. So you're up in Nelson. You've got your kind of work experience. You've kind of got a full-time role there.
Yes.
Now, how did you get from there down to Christchurch?
Well, I fell in love.
Oh, yeah. And that made you shift at Christchurch.
Well, actually, via Queenstown. So, everything was going quite swimmingly in Nelson, and then at a bar called Plan B. Ironically enough,
I think I've been there.
Yeah, so I met my now wife, and she's a lawyer, so it makes it quite hard to win an argument.
Yeah.
And I was sort of born and bred in Nelson. I thought I'd die there. But, she wanted to sort of have a change in role that just wasn't available in Nelson at the time. And she was offered an opportunity in Queenstown. I'm like, well, either stay here in Nelson by myself or give this a crack. And so that's where I sort of ended up in Queenstown and had 3 years down there. Certainly enjoyed a lot of skiing and
it would be good.
The sort of tourism sort of activities, and then life sort of gets in the way as it does, and we wanted to start a family, and Queenstown obviously doesn't have much in the way of medical care, and with the in-laws here in Hamner Springs, sort of Christchurch was a natural fit after the earthquake. And I could also see an opportunity to be part of that sort of rebuild process, I guess. And that's where you go where the opportunity is. And
Yeah,
that's
definitely.
Certainly been.
It was like the scaffold business when the earthquakes happen.
Oh, absolutely.
Yeah.
So you got to take a few risks if you want to get ahead, but it's always sort of calculated risk. And now Christchurch is a beautiful city.
Fastest growing city in New Zealand, I think, from the stat that I read.
We don't want everyone knowing how great.
Yeah, exactly. Well, it's just like you've got the Port Hills here, you've got like Hagley Park, and you've got this beautiful Southern Alps. You've got ski fields. You can go down south to Wanaka or go up to Marlborough Sound.
It's got everything.
The West Coast, that's such a little slicked on area.
No, it's a cool place.
So you've moved up to Christchurch, and so what happened there? You got another job.
Yeah, so this is where I so moved up to Christchurch, and just sort of continued my trajectory of I think I'd just done my chartered accountant qualification in Queenstown. So I think when I came up,
What involves in that?
a lot of pain and suffering.
One of my good friends, he is recently just sitting his, and I'm just like, yeah, enjoy.
It's the same amount of time to become a doctor. So it's like a 7-year process. So it was like a 4-year degree, then you do some practical experience, and then you do a few exams. And so it's quite a long process. And throughout this time, like, I worked and studied at the same time. So I probably didn't do it the best way. But what was good from that is I had quite a good insight into what it was like really inside an accounting office.
Exactly.
Whereas a lot of the time, you can go through sort of university and things and you have good academic knowledge, but you don't have the practical sort of skill set.
Yeah.
And I think having that practicality, is an advantage. And so, came up here as a senior, became manager, associate.
And where was that?
This was at my previous firm, Baker Tilly, and then got up into the top brass as a director there.
And what does that entail?
Well, it was quite different to what I thought it was going to be honest. When I started accounting as 16, I wanted to be a partner, a director by the time I was 31.
Partner director, they're kind of
the one of the owners. Yep. I didn't get there till I was 31, so it was a bit of a failure. But I thought that once you got to that partner level, you would have sort of autonomy and a bit more freedom over what your day sort of looked like. So, you work hard and, you've built this career, and it's natural that when you get to the top that there should be a degree of flexibility
definitely
around that.
Yep.
And as I soon found out, sort of large sort of corporates, they don't really have that flexibility, I guess. And with a young family and wanting to be involved as an active father, I guess those competing demands were at odds with each other, I guess.
And that's when you made the jump to
and that's where Optima is, and it's one of those ones where it plays right back to my sort of first job in Nelson, because I went into business with Leighton, who was my buddy when I first started accounting.
So you met him at the firm, or the OG firm in
Nelson.
Yeah,
the OG. And so we talked about doing something for many, many years on and off, but it never really sort of came to fruition until the sort of stars aligned, and it did. And it's so far it's going really, really great. I've been quite humbled by
I've seen the process. So I remember going to when it was just you and Leighton, and then you've got I'm not too sure her name, but you've got
Lily building out the team.
Yeah.
Got Richard, who works in Portugal.
I've seen some photos with you've been expanding.
Yes,
maybe you want to touch on that.
And you're building out the new office and things.
Yeah,
and we possibly will outgrow our current location within the next 12 months. We'd like to get back into sort of closer into the CBD if we could. So we're going through this sort of massive sort of growth journey, which is great. But then, that has its own sort of challenges that come.
Like what? What do you mean by that?
Well, it's just about how you prioritize your time to make sure that, you're delivering for clients, not sort of stressing yourself out, and getting some work done.
Yeah, because with the new building, do you think you'll ever you see how let's say Baker Tilly or some type of accounting firm where they have all these different kind of branches and everything around that? Do you think you'll ever expand like that?
Well, I've done the corporate gig, and I think there's a certain allure that goes with that, I guess. But I think there's something a lot more authentic around what an organisation like Optima has.
Yeah.
It provides a vehicle where, you can do some really good work, generate a good income, but also have a life at the same time.
Exactly.
And there's real value in that, because, you don't, I've just, recently turned 40, so I'm old now. And so you start to look.
You don't look 40.
You look older. But, you start to look at, well, what do you want to get out of, all that time that you do spend at work.
Yeah, well, it's like my flatmate. It's like, as you kind of said, is like you become authentic and actually have a actual relationship with a client rather than just a number on the screen.
That's right.
And that's what he kind of said when he switched from the other one to you. And
oh, that's pleasing.
pleasing
To hear.
Yeah.
And it's really that personal relationship piece is key, because
Yep.
without a person behind it, the numbers are irrelevant. And so it's about, just doing a good job for that client, understanding their situation and making sure that we're sort of coming up with a solution that, complies with all of the myriad of rules that we have to deal with.
Definitely. I feel like every time I come in, we have a good yard.
There's just so much complexity.
Yeah. But recently I see the IRD have released a paper.
Yes.
It's a bit more technical now, but the IRIP, I think it's called IRIP 18, might be able to correct me on that. Have you read into it?
Yeah, it's basically confirms what they've said in their previous guidance, that essentially everything's taxable.
Yeah.
So I don't think it's a nice looking document, but I think fundamentally there's still this mismatch and misunderstanding, from, their side as to what they're trying, what the crypto space is, and I guess sort of how it operates.
And what are the issues with it?
Well, I guess the issue is a lot of the time, just based on the pure volume of transactions, where do you even begin to work out what the tax position is? Like, if someone's using bots and things, they could have thousands of transactions a day.
Hectic, yeah.
And a lot of the crypto tax software that's available, it does a good job for really, really basic stuff. But the moment you add any degree of complexity in there, it really, really struggles. And so from a compliance perspective, it's, IRD, they'll want 100% accuracy, and that's what we're always striving for. But it's the old rule of diminishing returns, like, is 90%, is 90% good enough? If to get that extra 10%, it's going to go from a $2,000 exercise to a $20,000 exercise, and not really result in much more, if any revenue. So you've got this real tension between, everyone needs to pay their fair share, right? So fully support that, but we've also got to be practical about how that is done, because they're conceptually they're not wrong. These rules, I could argue that, I don't necessarily think if you wrap a token that's disposal, I sort of see it as just one and the same, whereas they'll see wrapping as a disposal. So, but if you look conceptually, they just, there's just that disconnect as to what they're trying to achieve, and they can be probably a little bit too sort of, I guess, rigid in terms of trying to help clients get compliant.
There's an interesting analogy because I actually had a meeting with them because we did a submission, and when I was talking about the bridging and wrapping stuff, and it's like I gave them an analogy. It's like if I have a gold bar and I transfer it to another bank, it's just like, well, it's still like, I'm going from one to another, or I melt it down and put it to a coin. It's still the same gold.
Exactly, it hasn't changed.
Like, what's the difference? It may be a little bit less in weight, or the coin may be still the same size. But it's interesting. One thing they asked me was if I had any quick wins, if they could change something within the next 6 months, if you could change something, what would that be like for a quick win?
Yeah, I think they need to have a de minimis.
Yeah.
And I think that ties in, because you can have, you could have a situation where, someone does a whole lot of activity, but it doesn't actually result in any material tax amount, and they've got to go through all of this huge compliance burden, which is great for accountants, but terrible for the client, and doesn't actually benefit the taxpayer.
Well, that's where like the Bitcoin policy paper comes in. I think it was $1,000. But then again, like from my point of view, it's like if you're doing Bitcoin only, then it's just like, well, do all these rules for this, and it's like, oh, we're not going to do that.
You got to have it. You got to have it across the board, and it's one of those ones where, again, the IRD will get quite pure about it. And I think part of it, you got to really look at what is the actual true economic gain, because you could have someone who turns $1,000 into 10,000,
Mm-hmm.
and then they round trip that back to 1,000.
Mm-hmm.
But if it's across 2 years, 2 tax years, they might have, $10,000 of income in 1 year and then a loss in another. So they're paying tax on income that they now don't have.
Mm-hmm.
And it just, just all that sort of stuff just seems a little bit more complicated than it.
Do you think it should just be like, okay, if I buy through, let's take for example, Pay It Now. So you put $1,000 in, and then from there it turns into 10,000, and then from that 2 years later you cash it back out.
Yeah.
It's now $2,000.
Yeah.
Do you think that should be like a weighted in?
Yeah.
What you put in versus what you take out?
I agree. I think that is, that would certainly simplify things.
Yeah.
And I think there'd be a mechanism where you could actually, that could actually be quite transparent, because they've got all of it. IRD's got all the visibility on your exchanges and things. And, I think it would certainly make it a lot easier, because at the moment it's just a lot of complexity.
Yeah, and that's where the CARF update on that. Do you mind explaining what that means and how it works?
So CARF is basically, at the moment, if you use like a New Zealand crypto exchange, the IRD, they request the information from that exchange each year, and however they do it, they'll compare it with their records, and if you haven't filed a return, they'll go, oh, look, can you please explain? So that works fine domestically, but what happens if you use an exchange overseas? So like if it's an Australian exchange, possibly there's already some sort of reciprocal arrangement in place. But if it's some exchange in some country you've never heard of, the likelihood of the New Zealand Tax Department having visibility on that's quite low. And so that's where this CARF comes in, to basically have greater information sharing between jurisdictions. So we already have a lot of this generally with other jurisdictions, whereas this one seems to be more just focused on crypto specifically, where they see as a bit of a weak point that needs to be tightened up.
Yeah, interesting. It's just like interesting how the last kind of month I've seen as well is a lot of people have been getting the IRD letters, and I've seen it in like the groups that we run. People just post up the letter. It's like they're just like very against it. It's just like, oh god.
Yeah, and so to explain that a bit further, so I mentioned that IRD have access to certain exchange information from a New Zealand perspective, and if they believe that you've got undeclared crypto income, they'll send this letter, which is an opportunity for you to basically get it right. And I'd encourage people to take that letter seriously, because if there is any sort of skeletons, that is the time to bring it to the table, because generally if there is some tax to pay, the penalties and interest arising from that is a lot lower than if the IRD escalate it if you ignore
What
that
other
letter.
steps you would take? Say if I got a letter or you got a letter, what would you do?
Well, what I'd do is I would, I'd look at, I'd double check my records and go, well, is there any gains in here? And then I'd have a chat with an accountant as to, what the options are, because, if someone got into crypto in like 2017 and they haven't filed a tax return, and it's what 2026 now, there's, there could be, who knows what's in there. So the first step is you've got to get some visibility on what the gains are, and that's generally the hardest bit, because I can barely remember what I had for breakfast yesterday, let alone what I was doing in 2017. And so it's and so that's where you just got to do something. You can't just ignore it. And if there's something there and there's some tax to pay, you sort of just got to eat your cabbage on it, really.
Well, that's when you did a talk, I think it was last year sometime, about record keeping and at the Christchurch Crypto Meetup. And a lot of the questions they had, or that you kind of answered, was like, what is the purpose of like what you're trying to do? That was another kind of angle.
Yeah, in terms of the intention. And that's sort of the jury's still out on as to, how much intention sort of influences the sort of the underlying tax treatment, because crypto is still relatively new.
Mhm.
But I think in terms of the record keeping, there really is no substitute for Excel in my mind to some degree. Like, I've used a lot of these tax calculators and
Yeah.
things, and again, it just becomes more complicated than it needs to be.
Mhm.
Like, if you're quite disciplined on keeping a record of, when you bought a coin, the
Mhm.
quantity of that coin, the value of that coin, and then track that through to when it was transferred to another coin, it's going to go a long ways to make the record, even if you just have it as a running
Mhm.
thing. So date, purchased, X amount of BTC for this amount.
Mhm.
You can use that to then do some analysis on what the underlying sort of position is.
Mhm.
Whereas the crypto software, like if you do a transfer between wallets or to an exchange, it just, like, you'd think in 2026 that it would be able to calculate that, but it
Mhm.
just struggles because it doesn't. And it often, while these calculators will collate the information,
Mhm.
often what you'll have to do is then go through almost line by line
To
and
check
double
it.
check that it's
Yeah.
got it right.
Yeah.
So if you're going to have to do that anyway, you might as well just have your own,
Mhm.
keep your own records.
Well, there's an interesting thing in that meeting with the IRD. When they were asking about smart contracts, they were talking about, oh, like, how does it actually visually look?
Mm.
And so there's a real cool app called herd.echo. And like what I did is just grabbed up Uniswap's simple swap mechanic,
Mm-hmm.
and the amount of like you only see one
Yeah.
transaction happen, but the amount of stuff going behind the scenes is crazy. And they're just sitting there like,
Yeah.
whoa.
Yeah.
Yeah, they're blown away.
Blows your mind.
But it's interesting as it's like these calculators, they don't see any of that. They just see the simple swap,
Yes.
but there's so much more that goes
Yeah.
on behind the scenes. And it's like when you're doing these cross-chain swaps and everything like this, it's crazy.
Yeah.
But I think like for a New Zealander, right now you've got the IRD paper coming out, the CARF stuff. What should an everyday Kiwi who say has just been holding crypto and not too sure what to do?
Yeah. And I guess that's where you sort of got to look sort of at a high level.
Mm-hmm.
Like, you might not necessarily have all the detail, but if you know you bought some BTC in 2017 and you're still holding it, I think
Mm-hmm.
you're going to be pretty aware that there's some gains there.
Mm-hmm.
And so it's just, if you've got those sort of situations that you're sort of actively looking to get some advice around
Mm-hmm.
it. Like, you recall in 2021 when the NFT craze, like, that was pretty wild. Like, I knew people who made like $1 million just selling
Yeah, it's crazy.
selling NFTs.
Yeah.
And it's like, now they're worthless. But if you'd sort of been involved in that time and you'd made some money out of it, you're best to sort of front foot it,
Mm-hmm.
because, and this is where, like, the IRD, it sort of just takes a long time. Like, they can go back as far as they like and they've got limited resources. So just because they haven't done anything now
Mm-hmm.
doesn't mean they're not going to do
Do it.
something in the future.
Yeah. And the interesting thing is like, so you got the other side of it, so you've made a profit, but then you've also got the loss side of things. So say, for example, like I made $1 million off NFTs, and then I and then I bought more of them, bought another 500,000 with these NFTs. Now they're all worthless. Like, what do I do there?
Well, that is one of the real pain points. So
Yeah.
IRD, I've never had an issue with a return that's had income and tax being paid on it. There's very little question asked, if any. They're happy to have it.
Yeah.
But the moment there's any sort of loss being claimed, they're over it like a red rag to a bull. And that is probably one of the, the areas of that can be, sort of quite frustrating, because yes, they need to, you need to be able to prove the loss, but the recent ones that I've dealt with, they want to sort of go right back to the beginning and know the detail around every transaction that led up to that loss. And it's like, well, that exchange may not exist anymore. We may not have that. We may not be able to, they've just got, the bar is just set so high that it's almost unreasonably high.
And there's definitions as well, what you can claim back.
What is a loss? And it's like, well, the timing of that loss, and it's just one of those ones where sometimes you'll claim a loss and it'll sail through, no problem. You do a loss for someone else, and it's, by the time you've answered all the questions, it's negated the benefit of claiming that loss. So sometimes part of it's going, well, you got to be quite upfront with people and go, well, if you look conceptually, you've made a loss, but is it economic to try and claim that loss? And that's where it makes it quite hard from a compliance perspective, because IRD, they want, your tax return to reflect what happened. But what happens if, putting a loss in your tax return gives rise to like a $20,000 accounting fee, and then on top of a loss,
on top of a
and
loss,
it's like,
as well.
And so that's where you get this sort of tension, because our tax system is so complex that you can't. Most people can't do it themselves. So you've got these sort of accountants where we need to charge for our time. And so that's where you get this sort of tension
well, it's like Australia with the crypto consulting stuff. It's like, it's a whole nother beast within itself. And it's like, I'm trying to understand that now, and like how we do operations there and still like be able to communicate with the businesses. It's very complicated, but I think we're getting there.
I think it's one of those ones where it's, the old adage, death and taxes. Death and taxes, right?
Death and taxes. What do you mean by that?
Well, it's just two truths of life.
But no, I think that's pretty much time. Really appreciate you coming on, Matt. It's awesome to have you.
Anytime.
Appreciate being here.
That's all right.
Appreciate it.
Let me introduce you to